What is up, everybody? Stocks by the numbers. Welcome back. Quick update here on McDonald's Corporation, symbol MCD here on the New York. Stock closed a touch below 313. It's right about there after hours right now. Still continuing upward here, hitting these highs recently of 315.36. And in my opinion, I still think that this company deserves to come down. And we looked at it a couple of times here in the past. I called out this long-term rising wedge, and the stock ended up pulling back to about like 245. Then we started to climb up, basically back to right the top of that wedge right there, right above 300. And then the stock rejected, pulled back again to about the low 240s. And since then, we've been on the up and up. And you can see that we did an update right here when these earnings came out, and the company missed on both the EPS and the revenue side. And they also said that, low income customers are, no longer their demographic. And in my opinion, that seemed like some pretty bad news. And I mentioned a while back that it kind of seems like they're pushing away the volume of business that they used to have. And now it seems like they're just taking advantage of their quote unquote loyal customers, and consistent consumers. And it seems like, when the average person, you see a lot of videos online, the average person, goes to McDonald's and they're like, oh, I just got a Big Mac meal, it cost me like 20 bucks. So it in my eyes, it's really gotten out of control. And this rally, I mean, again, this is the problem with markets that just continue to climb up and go higher, right? Because if everything is green and everything's up, then something like McDonald's is going to go up, whether it deserves to or not, really. But in my opinion, I want to say it comes back down here to 240 to retest this support trend line. But as we see, the stock has other plans and it continues to tick higher. So I'm really not sure what to make of this situation. And I know people are probably going to say, well, they recently brought back like that $5 meal or whatever. But first of all, I don't know about by you guys, but by me, I remember it was, I think February was like the last time they had a deal going on, when it was like the 2 quarter pounders or whatever for like $7, $8 or whatever the price was. And that was for Black History Month, apparently. And since then, I just see them increasing their prices. And again, earnings for the last couple of quarters have been pretty rough. But yet the stock not only rebounded to where it was, but has gone even higher now and has hit new highs. So it's kind of hard for myself to wrap my head around it. And that's why, again, I mean, this wouldn't be one that I would trade, because on the way down here, I probably would have been confident that we would have saw a pullback here to retest this trend line. And you can see again that the stock decided to bounce and started to rage up. So in my eyes, this might be one that's a little difficult to trade, but we know that McDonald's has been around for a while, and there could be people seeing these videos in their 60s and their 70s who bought shares of McDonald's stock, 20, 30 years ago. So obviously, they're sitting very pretty, and they love this growth. And a lot of these numbers do seem pretty good. But again, in my eyes, I almost feel like they're I don't want to say punishing the average consumer, but again, it seems like they're not going out of their way to bring those consumers back, right? And it took two earnings misses. Well, here they missed on profitability and slightly beat on revenue, and then here they had a miss, and then all of a sudden, like a couple of weeks after that miss, we heard the news about the $5 meal, right? So now all of a sudden they're trying to backtrack and get back that business that they kind of pushed away. So only time will tell if that does materialize into more revenue. Next earnings due out in a little less than 2 weeks, October 29th. EPS estimates of $3.19 a share, we'll call it, on revenue of $6.79 billion. And with the $5 meal, they may actually be able to beat that revenue expectation. But in the numbers, in my opinion, I just think it's overvalued, and I think it's just following the rest of the market. And again, this is why I say it's dangerous sometimes to have these market pumps. Market cap right here, $224.5 billion. We're getting paid a dividend yielding out about 2.25%. We're trading almost 27.5 times earnings. That beta is very low, though. That is one good attractive thing about the stock. And you can see the profitability pulled back, was expected to rebound and missed back-to-back quarters. And this is the first time in a while that we see some red down here on McDonald's. So this is why, again, I'm a little thrown here as to why the stock is hitting new highs. I mean, if it wanted to come back up here to, 280, 290, I can understand kind of, but to break up and out, I don't know. In my opinion, I don't get it. The profit margin has been stepping up very, very well here to close out 2023. Net margin percentage above 33%, revenue up to $25.5 billion. So we are trading about 9 times annual revenue right now, which could probably be viewed as excessive, but because it's a brand name company, they might keep it up. They might keep it up. The one good thing about McDonald's is, of course, the dividends consistently getting paid out and consistently being increased. You can see for 2023 getting above $6 a share. The debt up to 50, went down to 50.8, back up to 52 billion. Free cash flow for last quarter 106. This time last year 1.15. And also cash took about a 50% hit. You can see cash on hand this time last year, 1.63 billion. As of last quarter, sub 800 million. We have assets outweighing liabilities in the short term, and we have the inverse in the long term. And in the numbers, again, I do see a lot of these metrics consistently increasing because, again, they're basically driving up their prices, which is generating more revenue, which is expanding their profit margin. And of course, there's also talks about them going like fully automatic and, completely eliminating like a lot of their staff. And you see now in a lot of locations, there's like the kiosks and you just like, touch the screen and push what you want and then you just pick up your food. So it seems like they're really starting to trim out that employee cost. But also at the same time, it's laughable because I see in videos that, like you walk up to the screen and you put in your own order, you do it all yourself. And then it asks for a tip. And if we're going fully, automatic or autonomous and we're eliminating the human factor, then who are we tipping? So I find that funny. But as we see here in the numbers, the equity seems to be slowly increasing up, but it's still negative. And that always baffles me as well. But we can see the equity now is up to negative 4.8 billion. And you can see about a year and a half ago, we were at -5, -6 billion. So that's technically moving in the right direction. The debt consistently kind of keeps increasing. The book value per share is now negative. I mean, it's been negative, but it's still sitting here at negative 672. Technically went down a little bit the last couple of quarters. But overall, I guess that's moving in the right direction. PE sitting here at 27, and you can see a while back we were up here at above 30 at some points. But granted, the company was a little bit more consistent in the numbers at that time, which again kind of baffles me as to why we're rallying this stock up and hitting new highs just because markets are green. Price to sales up here at 8.78. You can see we have to go all the way back here to beginning of 23 before we got that same ratio. And then after that, we pulled back to 7.7 and just kind of hung out actually in the low to high 7s. And now we're up here in the high 8s again. So it may be due for a little bit of a pause and a little bit of a pullback soon. 23.5 times cash flow. I guess that's pretty much the mean average here going back the last several quarters. Enterprise value 276 billion. I really don't know where they get that number from. Our return percentages, we're bouncing around, but technically we're up from where we were. Gross margin percentage up here at almost 57%. And you can see that we did climb up to 57, then drop down to the low 55s. Now we're back up to 56.8. So technically that is moving in the right direction. Operating margin now up to 47% almost. Touched that point a couple of quarters back, and before and after that was kind of like 43 to 45. So that technically is a green flag. EBITDA up to 54.65%. That's kind of the mean average for the most part. 53 it looks like. Net margin percentage last quarter 31.16. technically down a little from the previous quarter, technically down from the previous quarter, and down from the few quarters before that. So we went from 35.5% down to 31% on the net margin percentage. But apparently people keep buying McDonald's shares. Inventory turnover bouncing around. Asset turnover, again, how much revenue the company is generating off of assets on its balance sheet. You can see we climbed up from 0.44 up to 0.50 and have kind of been holding that value over the last several quarters. Our debt ratios bouncing around, but essentially the same. And of course, we have our dividends coming out, which is basically, in my eyes, the main reason as to why the stock is remaining steady. But you can see over the last couple of quarters, we had 2 revenue misses over the last 3 quarters, and we had back-to-back EPS misses coming into 2024, which again is why if the stock wants to hold a value of like 260, 270, like I kind of understand, but to pump it up here well above 300 and have it just consistently hitting new highs, I really don't understand it at all. But maybe someone can enlighten me. And if we switch down here, you can see going into 2020 and coming out of it, the company has actually missed annual revenue expectations 3 of the last 4 years. So even though these numbers are growing, they're technically not growing as well as Wall Street expected. But in the company's defense, you can see that the misses are extremely slight. And we're still expecting continued revenue growth over the next couple of years, looking to close out 24 at 26.1 billion, get up to almost 27.5 billion next year, and then almost 29, and then above 30. So I have to assume that prices are just going to consistently increase hand over fist over the next several years because, again, off of the recent $5 meal news or whatever they said, that really is the only kind of promotion that I heard about to where they're trying to help out, the average struggling consumer who's living paycheck to paycheck and they're looking for other options. Burger King, Wendy's, they're looking to the other locations who are giving them a little bit more bang for their buck. So I'm curious to see if they actually hit these levels over the next 2 to 3 years. On the annual side, though, we can see 19, 20, and 21, we missed the mark on the profitability side, and then, of course, chunked it up and have been rising and raging ever since for the last 2 years on these buffed up prices. The company, you see, this is interesting as well. The franchise restaurants, the revenue has chunked up dramatically. Look at the 2020 change going from 2020 to 2023. You can see franchise restaurants went from 10.7 billion to almost 15.5 billion. So that's like a 45% increase. While at the same time, we had the company-operated restaurants who were a touch below 13 billion start to dip down to 8.1 billion and kind of have been bouncing around the last couple of years, but it's still below 10 billion. And also, we spoke about Arco, which is, of course, the McDonald's locations down in like South America and the Caribbean. And McDonald's, I believe, is getting, I want to say 6%, 6.5%. I think someone mentioned in the Discord. I think they're getting like 6.5% of revenue from Arco. So that, of course, is helping them a little bit. But I think we're only talking about, like 50 million or something. But I mean, listen, growing company again, and they consistently keep their margins growing. So I understand the appeal. I understand the consistent dividend and the fact that it's always increasing. I can appreciate that. But again, I'm telling you, if markets weren't raging and consistently sitting at highs, this stock may be $100 less. So just based off recent earnings and how the company has been struggling a little bit, I think that I would wait for another pullback. Again, something like this, I would wait for it to pull back. And then you can see it has the healthy bounces back here. So in my opinion, I would wait for a pullback. But of course, when you look at what the analysts are saying, they're just consistently bullish on McDonald's. But you have to remember as well that probably, a good chunk of funds out there probably own McDonald's shares. So it'd be very hard for someone to be bearish on McDonald's, right? Let's see. TD Cowen raised McDonald's price target from 280 to 300. See, in my opinion, 280 was like a fair price. But we pump it up to 300. We just keep adding catalysts to the situation, right? Maintain a hold rating. Okay. Maintain a hold. What is this? Campaign stop by Trump. Oh my goodness. Krispy Kreme McDonald's rollout. Nearly 7 months after their partnership was unveiled, Krispy Kreme has started selling its donuts at McDonald's locations across Chicago. Okay. Probably McDonald's start highlighting the benefits and the initiative. Investors will take notice. TD Cowen again. Sold some shares. What's going on with McDonald's stock? Morgan Stanley maintains overweight rating. Raised price target from 296 to 340. Like, really? Evercore maintained outperform. Raised price target from 320 to 340. Truist maintains buy rating. Raised price target from 295 to 350. Truist anticipates a strong third quarter performance, citing a potential beat in same-store sales and earnings. McDonald's U.S. system sales for third quarter are estimated to be $13.7 billion. Project growth of 0.5%, driven by menu innovation and successful promotions, alongside the traction of McDonald's $5 meal deal, yep, and the launch of the Chicken Big Mac. Okay. Collector's Meal promo, which launched in August, helped lift sales. Expect McDonald's to benefit from favorable foreign exchange rates, leading the firm to increase its adjusted EBITDA estimate to $3.756 billion. Everyone is just consistently bullish on McDonald's. And again, I feel like, it's just, again, from the pumped up menu prices and the people who are very loyal, they want to get their McDonald's once a week or twice a week, whatever it is. Also, you have, certain people, a buddy of mine tells me that, there's like this little like mom and pop little Greek restaurant by his office, and then there's a McDonald's. Like anything else is like a little bit of a distance away, right? And he may not have enough time to actually go and enjoy a meal and make it back to the office in time. So, some people are stuck between a rock and a hard place and they don't have many options. But in my opinion, I do know that McDonald's has received a lot of backlash from these rising prices and not really helping out, the lower income consumers. So I'm curious to see. I mean, reinstating this $5 deal, technically is a good idea to bring traffic and volume back into the company. But I don't know, people may have been fed up. Maybe people heard about the deal, but just said, you know what, I don't care. They kind of screwed people over for so long, I'm not going back. So they may have lost a lot of customers over the last couple of years, especially coming out of the lockdowns and really rallying up the price of their food. U.S. outlook improving. Estimate for U.S. same-store sales was revised to a gain of 0.5%. Momentum potentially continuing into 25. Better international visibility might be needed for the next leg higher. Better trends versus rivals recently, at least in the U.S. A view of lower-end customer relief next year, and the interest rate outlook helped spur a stock rally. And these, quote, remain relevant themes. Results expected October 29th. From 296 to 340, overweight rating. Let's see. Yep, that talks about Truist again. Maintain outperformed by Evercore from 320 to 340. I mean, everyone is still very bullish on McDonald's. That's all it comes down to. And this obviously helps the stock continue to go higher. But I'm just amazed. Some companies we look at, they miss earnings slightly, the stock tanks. Some companies, they beat earnings, but, certain metrics were a little lower than expected, so they tanked the stock. And then we have companies like your Teslas, your McDonald's, who can miss earnings and still run up and everything's fine. So I guess it is what it is. You have to take what the market gives you. Price targets from 257 to 360. Everywhere you look, though, everyone is bullish for the most part. So overall, technically in the numbers, it doesn't really match up to what we're seeing in stock price. But again, I mean, if markets are pumping, if the Dow wants to keep pumping, then yeah, probably most of the Dow components are just going to keep climbing. McDonald's sues meatpacking firms. Oh, what is this? McDonald's has sued major meatpacking companies over allegations that they conspired to limit beef supplies and drive up price. Yeah, I know. Yeah. Okay. Yeah. It was the beef supplier. It wasn't you. Okay. Sure. I call BS on that immediately. That's just me. Named in the suit were JBS, Tyson Foods, conspiring since 2015 to reduce output to drive up industry prices. Are you kidding me? Since 2015. I don't know about that. I really don't. Quote, only colluding meat packers would expect to benefit by reducing their prices and purchases of slaughtered cattle because they would know that their conspiracy would shield them from the dynamics of a competitive marketplace. McDonald's seeks monetary compensation, of course it does, and an end to the alleged scheme. The meat producers have denied any wrongdoing in previous cases filed against them by retailers. McDonald's, JBS, and Tyson did not immediately respond for comment. Well, who knows how that's going to play out. Obviously, if it goes in McDonald's favor, they're going to get a big chunk of change, which is probably going to drive the stock up even more. Maintain that overweight by KeyBank. Price target raised from 305 to 330. McDonald's chicken Big Mac. I'm not sure where that even came from. I mean, was that a thing? You guys who eat McDonald's, let me know in the comment section. Was that a thing? Were you ever sitting there eating a Big Mac saying, you know what, this should be chicken? I don't know where that came from, but I don't know. I mean, I guess because it's new, a bunch of people are going to say, well, I guess I should go try it, right? And there you go. So it all works out for them. Chicken Big Mac, yep. Oh, what is this? Okay, tell me the reasons. Start putting tempura chicken patties. New initiative, okay. Yeah, in an earnings call, announced that the company's chicken products have finally caught up with beef sales. On par with beef, okay, very nice. Chicken wraps and tenders. McCrispy chicken line. By 2026, it expects chicken sales to lead beef by a whole percentage point. Really? Company Metro Chicken. It would launch more chicken products. Yep. By adding chicken burger. Which customers to feel comfortable with the chicken rather than offering it in a burger. They did this in Miami apparently before. Okay, I wasn't aware of that. 2022, it also briefly launched in the UK and Ireland, where it remains the company's best ever new launch. Okay, there you go. Preference for chicken burgers. I was going to say, it definitely has to come down with the rising cost of beef, right? That's what it always comes down to. It costs McDonald's much less to make a chicken patty than it does a beef one. There you go. End of story. So what does this translate to? Getting people in the door with the marketing of, ooh, the new chicken Big Mac, when in reality, you buying a chicken Big Mac beefs up their profit, no pun intended, even more than when you get a regular beef burger Big Mac. That means that the new Big Mac costs the company less. But do they lower the price? No, of course not, right? It's probably the same price. If successful, it can help the company squeeze out more profits without raising the price. Strategy is significant because customers continue to be wary of how much they spend in restaurants. $5 meal deal has also extended till December. Oh, okay. I thought it was only a month long. Okay, so that's going till December, apparently. Showing that customers are still looking for cheaper food options despite the economy seemingly on the improvement path. Yeah, only on Wall Street is the quote-unquote economy on a seemingly improving path. McDonald's stock is up 19% in the last year. Continues its long-term bull trend despite a hiccup in the middle of the year caused by the lack of clarity on the monetary policy front as a result of political uncertainty. Investors looking to hold the stock long-term should be happy with the company's innovation, even if it only comes through a change of patty in a burger. So, yeah, hopefully they generate some big sales with the new Chicken Big Mac product. And of course, the chicken costs them less than beef. So that's going to pump up profits even more. So that may actually turn around the lagging EPS numbers that we've been seeing over the last couple of quarters. And also the $5 meal deal. I guess they're trying to, again, kind of revive the low-income consumer demographic. And extending that out till December instead of just the 1 month should technically generate them more revenue. And we do have a good chance for an earnings beat in next quarter, which would be January, right? November, December, January. Yeah, that would be January because this is the period ending September. And yeah, they said what? The $5 meal deal launched like a week ago. So if this is the period ending September, that's not going to incorporate the $5 meal deal, which is why, again, the fact that it pumped and climbed so much off of that news kind of throws me for a little bit of a loop. But again, that's just me. Chicken Big Mac. I just want to see. I know this is boring, but I'm just seeing neutral at Citigroup. Price target raised from 301 to 317. It's just sad because, again, I feel like the lockdowns and the hyperinflation and the mass printing of the US dollar, I feel like that really impacted stocks to no extent. And now you're seeing, again, just to remind everyone, markets are up 50% in the last couple of years. The Dow was at 28,000 when Donald Trump left office. Arguably one of the best presidents for the U.S. stock market since Ronald Reagan. And he saw, only a couple of thousand points on the Dow, and when he got out, it was at 28,000. Now we're at 43,000 and continuing to climb and hit highs. So this is what I said originally before we broke up into the mid-higher 30,000s on the Dow, and we just continued pumping even off of bad news we got in the economy. And I said, in my opinion, this is very, very dangerous because we're basically buying into and helping the reverse stock crash. To where, yeah, stocks are raging and you made a couple of bucks in this stock or doing, shares of that or whatever. But at the end of the day, as we see now, it's, $20 for a Big Mac meal. And, people put in a DoorDash order and it's, $70. And right now you're starting to see the negatives from this whole pump. So, I don't know. It is what it is. I go on my rants. Again, in my mind, that makes sense. And that's why I was saying, as we ran up the Dow to, 33,000, 35,000, we were just up too much, too quick on not realistic economics. And that's why I said it may not be what people want to hear, but we realistically should tank this Dow back down to like 20K and change. Bring it back down to earth, bring it back down to reality, and then bounce it and slowly climb it back up to those highs to make it a little quote-unquote more realistic. But, we've basically, that ship has sailed. And again, 28,000 to 43,000 in the last couple of years. It's astronomical. Right, yeah, we have the news with Arco as well. I don't think, did I do an update? My apologies, I'm all over the place in this video. No, did not do an update on that. But this news came out about 2 weeks ago, and we can see shares of Arcos Dorados climbed after the independent McDonald's franchisee said it would renew its master franchise agreement with the burger chain. Stock was up 16%, back above $10. Again, we looked at that one, right? We were looking at, I think, what, like the 870 level and then like the 770 level. And I was saying the whole time, in my opinion, the stock went on a tear for like 4 years coming out of those lockdowns. Got quiet, started consolidating in a downward channel for like the last 6-7 months. No one knew what was going on, but I said, in my eyes, it looks good in the numbers, should grow over time. Then we get this news here coming out of McDonald's, and the stock immediately pops back up to above 10. So shout out to the Arco crew who, was bullish on that and, stayed positive on that position. Congratulations to you guys. Operator of McDonald's locations in Latin America and Caribbean countries, said Tuesday morning that it would exercise its renewal option and replace its existing agreement with a new 20-year deal that starts on January 1st. McDonald's and Arcos Dorados are working to finalize the new agreement, which is expected to include another renewal option for a 20-year deal that would start in 2045. The next arrangement is also expected to include a 6% royalty, there you go, on gross sales for the first 10 years, followed by a 6.25% royalty for 5 years and a 6.5% royalty for the final 5 years. So that is some good news for Arco. Failed to spot forced. What is this? Signs that a gang forced 16 victims to work at either McDonald's or a factory that supplied bread products to major supermarkets were missed for years. Really? Including paying the wages of 4 men into one bank account. 6 members of a human trafficking network from the Czech Republic have been convicted. Wow, this is wild. I didn't hear about this. Quote, together with our franchisees, we have taken action to strengthen the ability of our people and systems to detect and deter potential risks. We have begun a partnership with Unseen, a leading expert organization that specializes in addressing modern slavery issues and helping businesses in mitigating any risks of modern slavery in their operations and supply chain. Wow. Okay, that got pretty dark pretty quick. All right, well, that sucks. My thoughts and prayers go out to those people who apparently were forced to work at McDonald's. Is this stock a bargain buy or a red flag? Let's see. Forward PE 24.5. Global comp sales slipped 1%. Stark contrast to the robust 11.7% increase in the prior year. Decreased for the first time after increasing in 13 straight quarters. Right? So that's what I mean. You have a piece of negative information like that, but again, after earnings, we missed and we rallied all the way up and continue to climb. More cautious consumer spending. France, soft performance. Positive comp sales in Latin America and Japan. War in the Middle East. Waning consumer confidence in China. Okay. In the U.S., comp sales dropped 0.7%, following a strong 10.3% growth last year. It played a pivotal role, though the impact was partially offset by higher average checks fueled by strategic price increase. I love how they always say that, strategic pricing. It wasn't a strategic price increase. You looked at the whole menu, you pumped everything up 30 to 50 cents. How's that strategic? That's not strategic. But anyway, I digress. While McDonald's traditionally leads on value, it's now starting to ramp up its prices and gouge all of its consumers. Competitors offering aggressive pricing have gained market share in some regions. Yeah, there's a lot going on now with some of these other franchises. And again, something like Burger King comes off the top of my head. I know it might not be everyone's favorite go-to, but I know they have deals now. They give you like a couple of Whoppers, a couple of burgers, and like a couple of orders of fries for like $20. And that's what I mean. When you take something like that and compare it to current McDonald's prices, I mean, it's night and day. And that's why if you're really hurting and you're looking to, get as much as you can, the biggest bang for your buck, the best deal you can, those people are not going to McDonald's lately. I'm telling you right now. High costs are likely to hurt the company's margins. McDonald's total operating costs and expenses were $357 billion, up 5% year over year. Company expects operating margin to remain pressurized in the near term. Labor inflation remains higher. Expects labor inflation to be in the high single digits in 2024, which is probably why they're working night and day to eliminate labor and just incorporate autonomous machines. EPS estimates for 24 and 25 have moved down 3.8 and 4.6 respectively, but the stock is still up, hitting new highs. Okay. Yeah, I don't want to keep going because we know there's like 18 articles that come out every day for a company as popular as McDonald's. Again, we're talking about the $5 promotion. But yeah, that's pretty much it. So the stock right now at these highs is trading about 9 times last year's revenue. And let's look at the numbers again real quick. 52 billion, 800 million. So I guess we can bring that down to 51 billion, excuse me. That's negative 51 billion. Negative equity of 4.8, so that's back at negative 55.8 billion. And the company did 25.5 billion in revenue and brought in 8.5. Add that up, that's 34 billion, which in my eyes leaves us with negative fair value, in my opinion, of negative 20 billion. Market cap 224.5 billion, consistently hitting new highs. So we will see now how these earnings come out over the next about 2 weeks, which again, they're saying that we may see some struggling here. So we may have a stock pull back all the way back down to like the 260s here. But then the next quarter is going to start to show that $5 meal, hopefully, the volume returning of sales from that $5 meal. So we'll see. This may be a rough quarter now in 2 weeks. And then next quarter, roughly 3.5 months from now, we may have a good beat incoming on McDonald's. But stock charts real quick, I'll let you go. Already spoke for way too long. But that was my fault, slowly scrolling through articles. RSI, look at this, right? Again, traders always tell me, oh, you didn't get that trade right because the RSI, it had to pull back. You don't know what you're talking about. RSI well above the 70 benchmark now for a couple of days. Stock pops, continues to hit new highs. RSI on the daily up here at 78. And look, this has been a trend over the last couple of months. Why not? Again, all of this is coming off of an earnings miss on EPS and revenue. Just keep that in mind. MACD, of course, crossed to the upside. Why not? Just add some bullish momentum. We're on the up and up. Let's switch over to the weekly. Up, RSI on the weekly, also above the 70 benchmark, sitting here at 72.1. Top Bollinger Band 319.54. I mean, based on recent trajectory, it'll probably hit there tomorrow. Look at these candles here over the last several weeks. Only one red candle. Truly amazing. And people want to know why I say that these market pumps are dangerous. In my opinion, stock should be here. And I said that last time, I think, when we looked at it before it broke down to these dips here. I was looking at it saying, in my opinion, it should be here at this moving average, like 230. It should be here at like 240. And you can see the stock had these big drops, but just immediately storms back. So let me tell you something right now. I know a lot of people may be riding this wave, and I really hope you guys are doing well in this market. I really do. I'm telling you that there is going to come a day where we're just not going to be up and up no matter what. And it is going to get very ugly and very bloody very quickly. So I just want you all to be aware that that environment could be coming very, very soon. But chances are, I guess, the stock's going to continue to go up. Apparently, RSI doesn't matter. Look at this MACD flying up off the screen here. And our 50-day over time, obviously, is climbing very nicely, as we see over about the last 2.5 years. Was off screen sub 200. Now it's up at 277. 200-day moving average here going into 23 off screen. Now it's up here at 250. So again, these are technically viewed as, longer term support trend lines for the stock to potentially retest and then have a nice bounce off of, like we've seen a couple of months back. But overall, in my opinion, if you like it, I get it. I'm not really, going to try to talk you out of it. I don't have puts on McDonald's. I didn't short it, nothing like that. But in my opinion, in the numbers, this doesn't really make sense. And I don't know. Even though every analyst on Wall Street is bullish on it, I don't like it. I don't like it. And, let me be wrong. Let's turn around in a year and the stock's at 380, still going, still hitting new highs. Okay, fine, whatever. I was wrong on McDonald's. Congratulations to your longer term shareholders, right? But in my opinion, if you gave me a couple of $100,000 right now, McDonald's, I would not buy it right here. That is just my opinion. Whatever you do with this information is entirely your own prerogative. But that's pretty much it. I spoke for way too long. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time, and have a good day.